What's up, you lazy, entitled, basement-dwelling millennials, bootstrapping boomers, apathetic Xers, and goddamn Gen Z kids today? Today we've got a great guest, author Paul Musson, who writes on or not politics, but is politically his his what'd you say it was your
What's a
bulletin?
blog that I have?
A
Yeah,
blog, your
politics.
blog. His name's Paul, and very dad joke that we very much appreciated here when he told us. But anyway, also author writes on economics is what I was getting at there, and you'll have to forgive me. I just had friends stay with us for a week, and I'm coming down off of the kind of vacation brain. So, but anyway, Paul, please introduce us to who you are, what you do, why you wrote a book or multiple books, how many books you've written, so on and so
One.
forth.
One.
Just the one.
It took me 6 years, so it might be the only one. So we'll see. But yeah, thank you. Thanks for having me on the show. So I was a professional investor for many years. My investing style was looking for high quality companies that put capital to the most productive use. And so we look around the world for those companies because we're allocating our clients hard-earned savings, right? They create capital. We could talk all about the difference between capital and money. They create capital. They save their capital for the future. They give us their capital to augment that, maybe grow it a little more, protect it from inflation and stuff like that. So in our mind, it always made sense to look around the world for what we thought were the best utilizers of capital. Like, who are the best businesses who are going to put capital to productive use, create more capital, increase their profit, hire more employees, pay them more. If they do all that, their profitability is growing, their share price grows, stock markets grow, then our clients benefit. And that's the way the system is supposed to work, which we'll get into in a second, where you only benefit if you're benefiting somebody else. Increasingly, the system is morphing into a benefit at the expense of somebody else. And we'll get into that for sure. So I was a professional investor and sort of witnessing what primarily central banks were doing to inflate asset prices at any cost. And it's not a conspiracy theory. And I believe that their intentions were good, but very short-term focused and misguided, and inordinately benefit a very small percentage of the population. They thought that jacking asset prices higher would be good for everybody, and that eventually the benefits will trickle down to everybody else. Well, they didn't, and they won't. And theory will tell you that they won't. And so I just got increasingly frustrated with what was going on. And then so my clients were financial advisors. I would make presentations to my clients. And I would rail about all this stuff, and I'd lose my temper, and I'd say it's so unfair and it's going to lead to bad things. And I was one of the very few voices in the investment industry who would talk this way. And
So why do you think that was? Why do you think that more voices didn't talk that way? Because you said again this whole idea of trickling down is kind of ludicrous, and it's been lunacy with anybody with even a modicum of critical thinking skills as to why that wouldn't work. It doesn't take a whole lot to understand that concept.
yeah,
And investors, in theory, should be relatively intelligent people familiar with how these markets work. So why do you think that you were the only person, or one of the few people speaking out in that sense?
yeah. Well, have you ever heard of Upton Sinclair? He was
The
more of a
jungle, yeah.
yeah, back in the 30s. Make sure we're talking about the same guy. He had a saying that if somebody's income depends on them not understanding something, don't expect them to understand it. They don't want to, right? So in the investment industry, whenever there was a wobble, whenever Wall Street blew up the whole financial system, the Fed would come to the rescue, bail everybody out, drive asset prices higher, and now everybody's benefiting from it in the investment industry. So they're always going to cheerlead the bailout because it leads to higher stock prices. Now, there's a lot of great people in the investment industry who didn't view it that way. And I can't really speak for them exactly, as to why they didn't see it the way I saw it. But I've lived my life with a more of a sort of face the music, don't kid yourself sort of attitude. I never gambled. I never, $40 here and there, but I never, or do lotteries and stuff like that. And it was from a younger age, and it was just my attitude then and now was that I really don't want anything that I haven't earned. And I don't want anything that comes at the expense of somebody else. And so this is what was going on. And a number of my clients over the years, and including a couple of my bosses, said, Paul, you should really write a book about this. And I think another reason they said that was because clear communication has always been an important part of what I do. And in the investment industry, and I was guilty of this, when I first started out presenting to clients, my main goal was to impress them, not to educate them. So if I impress them and they think I'm smart, and I use a bunch of big words that I know they don't understand, maybe I can intimidate them into not asking too many questions because they're afraid to ask. And they'll give me their money to manage, not because they necessarily understand what I'm doing, but they think, well, he must be smart. I didn't understand a word he said. And so I used to do that, and then I would get caught up in little white lies here and there. And yeah, it just didn't feel good. And it was.
Can you give us an example of some of those white lies? I mean, I think that's pertinent information because a lot of people obviously trust people like you to take their retirement savings, their investment, their capital, and protect that and act in their best interest. And often, it's very easy to take advantage of that or exploit those people.
Yeah.
Little white lies. Like, what kind of things are you referring to?
So specifically, I can't remember, but it wasn't so much as things I was saying, but it was more things that I would leave out that I knew the client would have been interested in, and it might have changed their mind, which is the same as lying in my view.
Yeah.
But at the time, I convinced myself that it wasn't. And so it was, at first it was just embarrassing, but then I realized it was just the wrong thing to do. And there's another saying, it's in my book, I forget who said it, but this is many years ago. The person said, if you always tell the truth, you never have to remember what you said. And it's just so liberating not having to worry about, what did I tell him last time? No, I told him the truth, so I don't have to worry. And if you tell somebody the truth about what it is you do and why you do it, and you do it clearly, then you put your clients or whoever it is in the best position to decide whether or not they want to be aligned with you as a business partner. And it might not be a good fit. And if it's not a good fit, then that is a good outcome. Because if they put their client's capital with you thinking you're going to do something different if the market turns, and then you don't do what you thought they were going to do, they'll take the money out, and they almost always take the money out at the wrong time to the detriment of their clients. That's a really bad outcome. Right? So
would you say,
the good outcome... Sorry?
Yeah, no, sorry. Would you say, like, sort of this, I don't know, you call it epiphany or just sort of gradual sort of understanding of how you were operating? Was that when you were at, like, McKinsey, working with clients there, or were you doing separate consulting work?
Yeah, no, that started at McKinsey. Now, I'd started many, many years ago on this sort of path because when I was really young, like early 20s, I was horrible. Like, I was so competitive, argumentative, had to win every argument, whether or not I was right or wrong. I wanted to win. And for example, and I give this to my client, the example of my clients. You know, I was having an argument with one of my girlfriends on the porch. And no matter what she said, I could sort of counter it and move the argument around. And finally, she just said, you know, okay, just stop. Said, I cannot beat you in an argument, but I know I'm right. And I was thinking to myself, I know you're right too, but I just can't admit it.
Sure.
Right? So needless to say, that relationship didn't last very long. And I remember going into the house after, I said, I've got to change. I've got to do something to change. And so that was 1984. I remember the day. And so it's been a journey of intellectual honesty, or striving at least for more intellectual honesty ever since. And it's not a straight path, right? You're up and down sometimes. And so there are little things that happen along the way that, you know, why didn't I see that before? And so that at McKinsey, that would have been probably 22 years ago. Might have been 2003, something like that. I'd been doing presentations for about 2 or 3 years, and, you know, somewhere around there.
Sure.
And
so then, I guess in your professional career, how did you? So you kind of had, revelations in your personal life, but how do you? What was kind of your path professionally speaking? From it sounds like you had a fair number of jobs in your 20s to working at McKinsey to now writing this book, which took you some time. But what did that path look like for you?
Yeah, it was a non-conventional path, that's for sure.
Sure.
When I was 28, I was delivering pizza for Domino's and working in a bakery in the daytime, just to earn enough money to move. This is in Montreal. I was born in Wales, but I grew up in Montreal. And so I just saving money to move to Toronto and look for a job. And so I had a bachelor apartment, sleeping on a hardwood floor. My first job was in a video store. It was called Major Video, eventually taken over by Blockbuster. So I was working nights, and I was 29 years old. That's how I got my start in Toronto. And then it's sort of a long story, a long path. Got a temporary job in an insurance company, got fired. And then I finally got into the finance world. I knew I wanted to be an investor, or not an investor per se. I wanted to analyze businesses. Sure. That came to me when I was like 25. I just thought, what a great way to make a living. It's so interesting. I've always been okay at math. I like the accounting side. I like the psychology of management. Do I believe them? How am I going to phrase these questions? The forensic accounting part of it. I thought it would just be so much fun, but I was very naive, even at the age of 29, 30, with respect to the structure of the industry. I really didn't know anything, because I went on a different path when I was younger. We can talk about that if you're interested. But and just started looking. And anyway, so getting into the finance world, my first job was as an assistant to a retail stockbroker. And I knew nothing about the job. And it's a real baptism by fire. And
Sure.
My old boss, Christine Timms, gave me the chance. And she ended up being, I worked there for 2 years. And she's on my blog post. She's still a friend. So she gave me the chance, and then I got a job with CIBC World Markets. That was on the institutional trading desk, so I was doing international equities. And again, I'd never done that before, but just learned as I went. And one thing, maybe I should back up a little. When I had that video store job, working nights, I was working in an insurance company a day. So it was 8:30 to 4:30 in the day, and then 6:30 till 12:30 at night, 5 days a week. And I loved it. And my attitude was, I'm not going to be a burden on anyone, either financially or emotionally. And people are going through all sorts of shit in their own lives. Why do you need to pile on, right? And so when I was in the video store, I would have fun with it. I would say hello to people. I'd look up the top 10 rented movies, and I'd watch them, so when people came in, I could recommend them to them. And I bet you there are people still at that area. Remember the older guy? He was so enthusiastic and blah, blah, blah. why not? Right?
Yeah. Mm-hmm.
And so I was in CIBC World Markets on the sales side, institutional sales side. And then I got a job, what's called on the buy side, with a mutual fund as an analyst, and I was there for a couple of years. And then I moved to Mackenzie Investments, where I spent most of my career in February of 2000, just before the tech boom imploded. And it was an amazing
or exploded,
career.
Depending on your tech.
Yeah, well, yeah. So went down.
Right.
Yeah.
Okay. So then this is, you said you've been working on this book for a little bit, but you've been working at Mackenzie, or you had been working at Mackenzie for not so long ago, really, which I guess is somewhat surprising to me, just because, in your book, like you say that, just considering your past, that, capitalism or capital in certain ways, this is where we probably generally agree a lot, needlessly punishes a majority of the population. And so you feel like you have a more obligation to do and say anything about it. And so just to be so recently working for, a company like Mackenzie, not necessarily like they're not inherently evil necessarily, but you think of them as like
not real the ethical pinnacle when people think about the corporate world, I would say.
Yep.
Right. Yeah. You think Mackenzie, BlackRock, Vanguard, some of those three, they kind of feel like they're in the same league, I guess.
Yeah. So maybe I would say, I know your feelings on capitalism, and one of the reasons I wrote the book is that, I think capitalism is misrepresented. The whole point of capitalism is that, like I said earlier, you should only benefit to the extent that you're benefiting somebody else. That's it.
Okay. Sure.
Right? So the example I give in the book is, so let's say, you make a bike, I make a suit. So we've created capital, right? There was no bike, there was no suit. We each made one. Now there's one of each in the system, in the economy, and it didn't come at the expense of anybody else.
Mm-hmm.
And now you and I decide to exchange that bike for the suit. Now we don't do direct exchange, which is barter. It's impossible to have a large economy with barter. We use the medium of exchange called money. So you make a bike, let's say it's a nice bike, and you sell it for $1,000. So you're holding $1,000 in your bank account. What that $1,000 represents is your contribution to society. You made a bike, and then somebody else voluntarily exchanged whatever capital they produced for your bike. You're both better off. Nobody else is worse off, right? Now, we can get into this in a second in terms of how capital is being extracted from people. So let's say you've got $10,000 because you made 10 bikes. So $10,000, it's got 10 bikes stored up in it. You're saving it maybe to go on a nice vacation at the end of the year. But before you can spend that money, the central bank doubles the money supply. Now, when the central bank creates money, they did not create any capital to obtain that money. They just created that money out of thin air, so it had no capital in it. It only obtains capital by extracting capital from the rest of the money already in existence. So it takes 5 bikes from your $10,000 and puts it into the newly printed money. And so in your bank account, oh, great, I still have $10,000. But guess what? It only holds 5 bikes instead of 10. And so now your $10,000 will only buy half as much as it would have before the central bank doubled the money supply. So they took your capital without your permission. And it's not without your knowledge. You do know because you know it won't buy as much anymore. But that's why the name of the book is Capital Offence. Why some benefit at your expense.
Sure.
So the issue is, I mean, there are many issues, and I don't pretend to have all the answers for all of them. But one of the main issues in my mind, and then you guys can deal with the rest of them, and people like you, is central banks printing money to drive asset prices higher, to bail out Wall Street, to bail out bad decision making. And they also do it by lowering interest rates, and we can talk about why that is so harmful to the economy and the average person. Essentially what they do is they sacrifice economic prosperity for the average person on the altar of higher asset prices. And they call this a wealth effect. Now, there is a real wealth effect. So earlier I was talking about our investment style and how, we would take our clients' hard-earned capital and we would look for the best businesses in the world who would put that productive capital to the best use. And so if they're successful in that, they're producing more capital. As I said earlier, everybody benefits. And the share prices go up, and then stock markets go up. And if stock markets are going up because of successful allocation of scarce resources of capital, then that's a real wealth effect, and everybody's better off. And it should be shared. So successful, a quick side note. For a business to be successful, longer term, all the constituents need to be benefiting. Not just the senior executives and the shareholders, but it's also the suppliers. It's also the employees. It's also the community at large. And finally, and most importantly, is the customer. So there's 6 constituents that all need to benefit for a business to thrive longer term. And the reason that the customer of all the 6 is the most important is because the customer is the only one who pays in this business model, right? Everybody else receives, right? So, I lost my train of thought. So capital. Yeah, no, I have lost my train of thought. So
on that, well, you're kind of getting it back on the rails there. I've talked about this a lot, and we really start to see this breakdown in businesses focusing on building equity, building capital, building value for the company and for the shareholders in real wealth, as you put it, by investing in the company itself. And then, right around the time of Reagan, when they changed the tax structure to start focusing on this trickle-down economics, and allowed companies to start doing things like stock buybacks and focus on quarterly returns and shareholder value in actual cash on a short-term basis. This is when companies started looking at the leanest way that they could run their organization for a few months out in advance. How can we up the quarterly returns? Yeah. And eventually, you can only operate a company like that for so long before it crumbles underneath of itself. And at that time, everything else is being, again, extracted. The value that is created by the workers, by the consumers, by the company itself is being extracted to benefit a very select group of people who are providing nothing. I mean, shareholders provide nothing but a little bit of cash to help get the company going. And I mean, while that is important, obviously, if they can bail at any time. They can say, I've taken everything I can extract from this and up and leave, and the company and everybody's lives who depend on it, everybody whose capital is tied up in that, is just left to deal with the mess as they move on to the next thing that they're going to exploit. And so, yeah, I agree completely with that, and I think that's kind of what you're getting at, if I'm not mistaken.
No, exactly. And I have a chapter in a book called Corporate Culture. And it talks about good and bad corporate culture. And so you're describing the latter. But let me give you an example, or maybe a couple. So one of the examples I use in the book is a company called Fastenal. So Fastenal, a very basic business, they distribute fasteners, screws and stuff. And so they're based in Minnesota. There are a lot of good companies in Minnesota for some reason.
Yeah, we know
And,
we know all about Fastenal and Minnesota companies. Yeah, we're both based out of Minneapolis.
Per capita, we've got the most Fortune 500 companies in the country. So,
is that right? Yeah.
Yeah, it's like obviously, we're only a state of about 5.5 million people or something. So there's other states with a lot more Fortune 500 companies, but they've got much larger populations. So, we're pretty happy with our.
Yeah.
Yeah. Well, and we have a lot of I would say pro worker and pro consumer regulations that really drive companies, and we can talk about this too, and this would be touching on kind of the politics aspect of it, or at least policy. People always think that you attract businesses by cutting taxes, giving them the cheapest tax, and that's not really true. The business is generally going to be, especially high value businesses where you need, skilled labor, they're going to be looking for the best labor pool that can provide the services that they need. That's the number one thing. And skilled labor pools live in places that are nice to live, that have good infrastructure, good education, a good culture to experience, good entertainment, all of that kind of stuff, good healthcare. And those things cost money, which means taxes need to be paid on those. And it just goes to show that as successful as Minnesota is in the economic scene, lower taxes on wealthy and the companies don't really seem to bring in business or drive away business. It's driving in the labor pool that the businesses need to thrive.
Yeah, and so I would add to what you said there, like regulation and rules are very important. The rules are often broken these days, and there doesn't seem to be any consequences. This is one of the big problems.
Slap on the wrist.
Yeah, but it depends who it is, right? So,
that's true.
But great businesses don't need regulation to do the right thing. Only bad businesses need strict regulation to do the right thing. They'll do it kicking and screaming, But let me give you the finished example of Fastenal. So we did a tour of their plant. This is 15 years ago. And so it's a mundane business. No, sorry for anybody who's listening who works at Fastenal. But anyways, the plant manager is taking us around, and he's so excited. Check out these screws. But our clients love us. You thought they're going to be, landing a rocket ship on the moon or something. So I said, so what's the big deal here? How come? And everyone around you was all in a good mood. So how come you love the company so much? And he said, well, it's management and ownership. They treat us like equals in terms of, running the business. And they always ask for our ideas. And it's not just lip service. They put a lot of our ideas, to work. And we all share in the success of the business. The more profitable it is, the more they all make, not just the senior execs and ownership. That's what it's all about. And then a little later, he said, oh my God, I forgot to tell you. So the CEO owned about a third of the company. His wife had owned a good percentage of shares as well, but she had passed away years prior. And when she passed away, the CEO took all of her shares and he distributed them to all the employees in the company.
It's incredible.
That's what it's about. Now, unfortunately, not enough companies think that way, but there are more than you think, right? So bad corp, and so this is, you imagine, now I never met the CEO, but I'm pretty sure his attitude wasn't, okay, well, I'll give him these shares so I can get these jerks to work more overtime. No, like he started the business. And this is, again, the difference when you have like an entrepreneur, someone who took the risk their own skin, your own capital, and sometimes it can take years. And I give an example in the book, a guy who owns a brewery in up where I live. It was 8 years before he was cash flow positive. But he never gave up, right? All his credit cards, second mortgage, everything, blah, blah, blah. He never gave up. So the founder of Fastenal, he probably had done every job that every worker has done in that company because he started off on his own. So he has way more empathy for what the workers are going through. the challenges that they're facing if something's not going right. He understands. He's done it himself. He's not what I call like a career executive that comes out of MBA school that has never started a business. And don't get me wrong, there are a lot of very good career executives. There are a lot of very bad career executives. And what you were talking about earlier, in that, they might come in and they really don't give a damn about the customer or the employee. What they try to do is extract value from the customer and from the employees in order to bump up profitability, drive the share price higher, cash in your options, take on debt to buy back shares that are probably already expensive, and then you pretty much destroy the business or significantly harm it, and then, you just step on to the next challenge, right? Because the entrepreneur typically loves their business. It could be something mundane like screws or fasteners, but they just love doing it, and they love satisfying their customers. They love providing people with a livelihood. It's a family, and it's really amazing when you see it. And so there is more of it than you think, but you just don't hear about these stories. All you hear is the negative stories, and rightly so, right?
Yeah.
They're going to be in the paper. And there are enough of those to go around for sure.
No, that's awesome. And I didn't know that about Fastenal, so it's nice to always hear what a Minnesota company is, treated. Because we've got some big companies, too, that have more than their fair share of scrutiny to go around. But that's really heartwarming to hear. And as you said, good companies don't need the regulations to do it. Only bad companies do. But unfortunately, obviously, those regulations need to be in place because
100%.
Most companies are. Most people, no matter what, and it's sort of the underlying foundation of capitalism is being selfish. You're trying to gain as much wealth, much capital for yourself as you can. That's the driving force. And in a well-regulated situation that ensures that doesn't run away into monopolies and exploitation, that can be a great driver of economic growth and wealth and prosperity for people. But obviously, it gets a little out of hand, and it can go very wrong at the expense of very many people.
No, for sure.
So I think. Oh, go ahead, Taylor. Did you have something?
Yeah, the way that you described Fastenal and whatnot, it reminded me more of like a worker co-op corporate company than like a company like Amazon or Microsoft. Like it reminded me of a company where obviously there's profit sharing to and share distribution in some way. Obviously, this is like a one-time thing, maybe, but a lot of companies will offer you shares and or profit sharing, and that's not. I guess it's not always done. And to me, that doesn't sound like the vast majority of like a Forbes 500 list of companies, sort of thing. And so
maybe I don't know what percentage, to be honest with you, like in the S&P 500. It's probably something maybe a project I should take on. But I think it happens a lot more with smaller businesses.
Mm-hmm.
Sure.
And there are millions of them out there.
I think it probably happens a lot more too in the manufacturing sector, in part because those businesses tend to have more union protections than a lot of other industries, especially like you think about Amazon, for example, or a lot of the service industry and stuff like that. They tend to be less represented and protected, and therefore it's easier for those people to be exploited. And I think that even if the company itself isn't a union company and those workers aren't union, just because that industry has a standard that's based on that type of union representation, I think that makes a big difference, because obviously if you don't treat those employees well, they can leave and go to another job that will treat them well or has that kind of representation.
Yeah. Now, it's funny you mentioned Amazon. I was listening to the radio this morning, and the DJ was saying that with this Prime Day thing, that Amazon was asking their employees to volunteer to work extra time to get it. No, pay them. You know,
Yeah,
what a
what
concept.
couple $100 billion company, asking their employees to volunteer to work for them. I mean, I know I joke about capitalist innovation all the time in situations like this. I know there's real innovation and iterations upon iterations that are created by just economic systems, but this is the sort of joke that I would make about. This is a great example of capitalist innovation. Just ask your employees to work for you for free.
Yeah, exactly. Boy, look at our profit margins going through the roof. Yeah,
Right,
so
exactly.
All right.
it's,
We were, I think, going to kind of move into some stuff from our perspective as millennials here. We can kind of attest firsthand to the hardships of what this economy has brought, forward, especially when it comes to like buying houses. We came of age during the financial crisis. I graduated high school in 2009, so you kind of just forced into a labor market that is not very favorable for us, and it doesn't ever feel like it's recovered, on paper, but it doesn't feel like it's ever
yeah,
really recovered. Our generation is really, I think, felt sort of the downsides of these economic missteps more than probably any other generation,
yeah,
living generation at this point. And we're really, I mean, we have our ideas on where to go forward from here. But I don't know. I'd like to hear your ideas on what you think the changes are. Like, what should we be focusing on and working on to rectify these problems, to make this economy an economy that works for,
yeah,
everybody.
yeah. So this is exactly the reason I wrote the book. It's more for your generation, and my generation is not going to be happy with this book, for the most part. So let's just back up a little bit in terms of how we got here and why. So I talked earlier about a
Sure.
good wealth effect when you've got like a great corporate culture and you're allocating capital and everybody's benefiting. That's the way it's supposed to work. And then stock prices go up. That's the real wealth effect. You feel wealthier. You got more capital to spend. Everybody's happy. But what happened after the tech wreck in 2000 to 2002? The Federal Reserve, or the central bank in the US, with some encouragement from market commentators like Paul Krugman and Paul McCulley, they were recommending that the Fed should create a new wealth.
Lots of Pauls in this industry, it
I
seems
know,
like.
yeah, maybe too many. And they were recommending that the Fed should create another wealth effect because there was that wealth effect from booming stock prices in the 90s and the dot-com boom. And there was a negative wealth effect when stocks went down. People felt less wealthy because they saw their portfolios going down. So create a wealth effect in housing, drive housing prices higher. People will feel wealthier. They will go out and extract equity from their home, borrow more money on their home, go out and spend it and buy an SUV or a flat screen TV, and that's going to be good for the economy. But house prices have no business going up. So stocks can go up if companies are putting capital to productive use and creating more capital. So it's the creation of capital that pushes the stock price up. When a house price goes up, what capital was created in society? Zippo, right? A house is not a productive asset, right? My house, I live in the suburbs of Toronto. We bought it in 2001. And if we sold it today, we would get 4 times what we paid for it. What was our contribution to society to justify making 4 times on our home? It was 0. And so if we did not contribute to society, but are making 4 times on our home, then it must be coming at somebody else's expense, i.e. you. The system is forcing you to pay 4 times what we paid for the same economic good. It's not like our house is producing four times as many widgets. It hasn't increased 4 times in size. It hasn't relocated to an oceanfront view. It's the same economic good. And so when you look down on it from a societal perspective, when we make 4 times on our home, there's not 4 times more capital in the economy. It's 4 times the capital we spent is transferred from a younger person's bank account into our bank account. It's a redistribution of wealth. And again, I don't believe that central bankers purposely try to create a housing affordability crisis and effectively ruin the lives of millions of young people.
So question is how specifically did the central banks drive up housing prices? Like, what policy levers were used to make this specific thing happen?
Is it just low interest rate? It's for lending?
Exactly. It's primarily low interest rates. And so, their rationale is that we're making housing more affordable by lowering interest rates. But over time, lower interest rates do not make housing more affordable. They make housing more expensive. What they do in the short term is they make mortgage payments more affordable. But then the price of the house increases so much it more than offsets the lower interest that you're paying on your mortgage. And so your total interest over the life of the home could be significantly more, even though you're paying a lower interest rate because the price went through the roof. And so I have some stats here, like in Canada.
Right.
I think it's bad in the States. It's terrible in Canada. And
I've heard a lot about the Canadian crisis.
It's awful. It's like younger people, they don't have a hope of ever being able to afford a home if prices stay where they are. They need to come down. And I would love for my home price to be cut in half or go back to whatever fair value is, right? Give people a chance to live, to dream. So for many, many years, the average price to disposable income in Canada, average price of a home to disposable income was about 7 times. It will go between 6 and 8 times. Today, it's 12. It just doesn't work. The math doesn't work. Like the math wasn't working in Florida during the housing boom in the mid-2000s. My mom was a nurse. And it's sort of anecdotal, but she was saying that, the hospital was having a hard time hiring nurses because houses were so expensive in Florida during that boom that nurses couldn't afford to buy or rent anywhere near where the hospital was. They had to live so far away that it didn't make any sense, And so lower interest rates.
The same thing's been happening. Oh, sorry.
No, I just finish off on how they did it.
The same thing's been happening. Oh, yeah.
Go.
Mm-hmm.
So it was lower interest rates first, and then it was printing money or quantitative easing. And they were printing money to buy mortgage-backed securities, which drove mortgage rates even lower. And it was an explosion of demand. And then there's a sense in, in the economy or in the markets that the Fed will always have your back. And so if you take on too much debt and you buy an overpriced home or an overpriced stock and it starts to go down, don't worry, the Fed will come to your rescue. But every time they do that, you increasingly impoverish the next generation. Now, there's something that we haven't talked about yet, which is interest rates and the negative effects or the harm that manipulating interest rates lower does to the economy. So in the economy, there's something called the natural rate of interest. And that is determined by people such as yourselves, me, anybody who have their own capital and they're making risk-return decisions about how much they should borrow, how much they should invest, whatever. but you have your own skin in the game. And when you have millions of people making all these decisions and borrowing and lending for different time periods or whatever, it results in a natural rate of interest, which results in the most optimal allocation of capital, the best allocation of capital, companies being the most productive. It's the most fair distribution of capital or allocation of capital. What we have had for the last number of years is central banks focusing, instead of on the natural rate, they focus on the neutral rate. Now, the neutral rate is the rate that keeps spending growing without causing inflation. So keep the economy growing without causing inflation. But because they encourage so much debt-fueled consumption over the years, as people were taking on more and more debt, they would stop their spending because they couldn't service any more debt. And so the Fed would lower the interest rate to get people, so people could service more debt, and then the spending would pick up. But then they couldn't service any more debt again, so they had to lower the neutral interest rate. Their observation was, oh, for some reason, the neutral rate of interest keeps going down. Well, that's because you keep encouraging people to take on more and more debt, and not just consumers, but corporations, sovereigns, right? Debt in the U.S. has gone through the roof. And so they keep lowering the interest rate so people can keep spending at a steady pace. But every time they lower the neutral rate, it goes further and further below the natural rate, which is the one that results in the best allocation of capital. And so you've seen productivity growth grind lower over the decades. And in my opinion, it's because of this.
So then, what would be your thoughts on the solution, on fixing that, rectifying this problem? Because obviously we're in this hole now, and we need to. Ideally, we're going to figure out a way to get out of it. I'm losing faith that we will, but if we're not coming up with some sort of plan to move forward and get us out of these holes, we're completely doomed. So what is your perspective on what would be the best way to rectify this problem from the position we are at right now?
Yeah. So first step is, like why I've written my book, is to educate people with respect to what's going on. Now, there's an old saying that the people always get the government that they deserve. That's yes and no. People get the government that they deserve only if they actually understand what's going on. And so then you can vote accordingly, or you can make demands accordingly. But only if people actually know what's going on can you demand the right actions from our policymakers. And if the people demand it, the policymakers will do it, because that's how you stay in power. You do what the people want. But we have not been demanding the right actions, at least from this perspective, monetary policy and asset price inflation, all this kind of stuff. And so that's the first step. And then I believe most people want to do the right thing. I really do. Not everybody, right? But, so what? Once everybody, not because of me, but once people actually know what's going on, then they will be more willing to take the necessary steps. And when I say more willing to take the necessary steps, because the necessary steps will be painful. And not so much for the younger generation, but my generation, because not so many people, like, I guess, a lot of people have benefited enormously from this, unfairly. Mm-hmm. And so in my book, I have sort of the 10.
When it comes to that, and you say that you have faith that people will do the right thing, and I'd like to have that faith in humanity as well, but we see this. It's hard to expect everybody to personally suffer for the greater good, and I mean it's easy when it's like, oh, I can donate a few spare bucks here to help this charity or something like that when it's a convenient type of suffering. But when you're talking about a lot of people, regardless of how we got here, their entire net worth really is tied up in these assets like their houses. I mean, that's the biggest
Yeah.
holding of worth that most families are ever going to have, right?
Yeah.
And then to just have that or drive up interest rates, is going to be painful steps that a lot of people I don't think would be willing to make. And we've seen this back in the 80s. We had stagflation after Nixon's kind of roughshod economic policies and pulling us out of the Bretton Woods system, and that caused inflation and stagnation all at the same time, which is crazy. And then you get Carter that came in and he's like, all right, we've got to make these painful steps. We've got to jack up the interest rates. We've got to put some regulations back in place. And this is going to be a belt tightening moment for Americans and for many people around the world. And it was working. We saw this because then Reagan gets elected because people were, didn't like the fact that they had to take these painful steps. Reagan gets elected. He benefits from these actions, right? The economy improves. It looks good. And that's what set us on this, all right, we want this instant gratification policy where, we want lower interest rates so we can buy more stuff because that's the only way that seems to make my life better right now going forward. And we're getting robbed blind in the process. But I don't see how expecting people who are barely making it by paycheck to paycheck, especially in this system that we've now created that has crushed so many working families, how we could expect them to make those. Because, yeah, it would be painful for the people who, like your generation, who it wouldn't bankrupt them, but it would just be painful to lose a lot of their life savings. But for people like us, where, housing prices are what they are right now, the demand for housing is what it is, just making these changes is going to not have that immediate effect of bringing those things down, and it will continually price younger people out of getting that piece of capital that they're seeking.
Well, again, I talk about it in my book that, for people like me, house goes down 50%, it's not going to impact my lifestyle, right? And but for younger people, particularly first-time home buyers, it would be particularly painful if all of a sudden they're in a negative equity position. And there, I think the government should step in with aid. Now remember, the government doesn't produce anything. All the capital is produced in the private side, and the government takes that capital either through taxation or borrowing or printing money. But we should be willing to help. And so for those who sell their homes, and if you, maybe it's a $2 million home or $1 million home, if you've got a capital gain, maybe there should be some tax on that to help those who've lost money, those first-time home buyers. This is not about trying to demonize anybody. Not everybody anyways, but my generation, everybody played by the rules. Nobody thought about it. You thought, but it's human nature being what it is, right? We all thought, I guess I know something about real estate. Look how much money I made. No, I knew nothing. I knew fuck all. I would just happen to be older, and I bought my house before all these policies went off like on steroids. That's all. And, when I talk to my generation about this, the vast majority of people get it. And they will tell me, most of them say, I never thought about it. You're absolutely right. Now, nobody's going to want to see their house go down in value, but it's the only way that the next generation is going to be able to afford to live. And I think if you put it to people that way.
So as a counterpoint, because you said, and I wanted to touch on this before I forget about it, you said the government doesn't create anything. People create anything. The government just reallocates resources, but that's not really entirely true. The government creates a lot, right? I mean, the government creates a lot of capital through research, funding for all kinds of stuff. All these widgets that private companies do, 99% of that came from government-funded research at some point, government-funded building at some point. Governments throughout history, and especially, the United States government, has put a lot of equity into building homes, into building parks, into building infrastructure. All of that is capital. The roads we drive on, even though we don't own it, is capital that creates economic value.
Yeah.
they do all of that, and I do think that that is one of the ways that the government could help is producing more homes, for example, and helping fund first time home buyers, making sure that the people who need that wealth redistributed to them because so much of it has been robbed from like our generations with maybe zero down, 1 or 2% interest loans for us for that first time home buyer, and that way not allowing people to continue to use the capital that they've gained to remove supply from the market and drive prices up even more. And then again, building more, providing more affordable apartment buildings and townhomes and things like that in city centers, making it easier. Restructuring zoning. We spent a lot of time talking about just zoning, for example, that limits the amount of supply an area can support just because it's like only single family.
And I talk about in my book how government is very important. I'm not anti-government. And remember, I live in Canada. We've got socialized medicine and all this kind of stuff. I think it's great.
We're very jealous of it. Actually, most of everything going on up there in Canada, we're pretty jealous of it.
Yeah. Well, but I mean, there are pros and cons, right, to socialized medicine. But in terms of, I mean, you're absolutely right. A lot of key research, is instigated or funded through government or infrastructure, but all the capital that the government gets to spend on that research or through infrastructure is obtained from the private side. And so
in a way, right? Like you said, they're like printing money in the sense that they're printing their own money to pay for people to build those things, right?
Well, yeah.
So in a way, they're kind of creating capital in that sense, aren't they? By creating an infrastructure, and then people are getting paid to build the infrastructure, and so that money then gets circulated, and it's less of an inflationary thing than just like a check, I would think. It's not that certainly. I wouldn't think that's a one-to-one sort of situation.
Well, when they print money to pay workers to build infrastructure, they're doing it with the 5 bikes that you had stored up in your $10,000. Right. So again, it's differentiating between capital and money. And this is not to say what is right or wrong. This is to explain what actually happens when a government prints money to hire workers and do this, and that might be the right thing to do.
Okay,
Sure.
so instead of saying that they're printing money, I mean, when you say that it's extracted from the private side and that's via taxes or whatever, I mean, really, what makes the difference between the government? If you look at taxes as a subscription fee, it is the fee that we pay to use the services of the house that we live in, right? Like we all live in a country, we need to pay our rent to utilize that. And so this is just a publicly owned infrastructure system that helps make that possible. It's really no different than a private company either going to the bank and getting a loan or going and taking the profits that they're earning from whatever services they provide and reinvesting in that company, right? So, I mean, it's still, even when you build a road, you build something that creates economic growth, right? I mean, people then use that road to move products that consumers can buy that can also be used to create capital. So, I mean, I would still argue that the government creates a lot of capital, creates a lot of economic growth and welfare when done properly. I don't think that necessarily printing money or, just lowering interest rates, things like that are the right way to go about it. And I do think that it's a healthier way to do it by investing in these things, making sure that people have good jobs, livable wages, so they can also be productive members, adding to the economy as well.
So, yeah, I guess, one of the differences is when companies borrow money, they have to pay it back, and when they create their capital and they have to get a return on investment. And as you'll see, in the book, again, I'm not anti-government, and there's a lot of important functions that government plays. But government doesn't have any skin in the game, despite your best intentions. We didn't talk about it, but I used to own a brew pub as well for about 7 years. And so it's interesting to be on that side as well, because I was always investing in companies, not help run them, if you will. And just incentives and skin in the game are so important, and it's got to be yours. And this is not about bad people, and it's people with good intentions. And when governments make investment decisions, there are not the same consequences as there are if you're on the private side. It's just a fact, right? And if I was there, it would impact me the same way. It's just human nature. That's all. Again, it's not about demonizing people. And so it's having balance here, and not demonizing one side or the other, and
And no, and I'm not saying that at all. I guess this is just talking about I guess the functions of the government and ideas on how to help fix the problems that we have right now. Yeah. I do agree that, especially in certain things, having some of that own personal skin in the game is incredibly important. I think in other situations, it's not. I don't think that profit is always even the best motivator for production. Some things, especially like when we're talking medical research, education, and we could even argue housing, things like that probably shouldn't be profit driven. There shouldn't be personal skin in the game. The motivation should be to reach a desired outcome that is best for everybody in situations like
with respect to housing, I would agree and disagree. So in terms of home building, I think the private sector with a profit motive could build, as long as there's competition, right? It's got to be freedom of competition. Then you would have the best allocation of capital. You have the most homes built. Where I don't agree, and where I do agree with you, when I don't agree with what's happening in the housing market, is large companies competing with home buyers and outbidding them for homes because they have a much cheaper capital, much cheaper funding. And so they can outbid people for these homes. So they buy all these homes in these communities, and then they rent them back, and you got a bunch of rent slaves for the rest of their lives. That's wrong. I'm a free market guy. But, you have a choice of whether you want to buy a corporate bond or buy stocks or stuff like this. You have a choice of whether you want to start your own business. You don't have a choice in terms of having to live somewhere. You have to be able to afford to live somewhere. And this, to me, is the great crime. It's terrible. Right? And
I agree completely.
And so, earlier you were asking, so what do we do? And, you might be right. There might not be enough people who are willing to do the right thing, even when they understand what's going on. I actually have great faith in humanity, and maybe naively so, but I do. And so some of the steps are, stop distorting interest rates lower. Let them be market determined. Then the economy will be more productive. There'll be more stuff being produced. And then prices would actually fall slowly. This is called good deflation. And if you stop increasing the money supply. Excuse me. So back in the 1800s, the last 30 years of the 1800s in the US, you had slowly falling prices. And the reason was because the economy was so productive. You had an explosion of productivity, you had an explosion of population, but the money supply hardly grew at all. So you had the same amount of money chasing more and more goods, so the prices of those goods had to come down, and they did. And so even if you are a flat wage, you're not getting a raise, you're getting wealthier every year because of the increased productivity. And this is, again, the competition, which is so important for this to happen. So as companies invest, they become more productive, their profitability rises, Others see the excess profitability of that company or that industry. They say, we want some of that. They're free to compete for it. The original company incumbent has to lower their prices now to compete to the benefit of the consumer. And a classic example, and I use this in my book, is flat screen TVs. Right back in 2000, they were like $3,000-4,000. Now they're 300 and they're way better. And if the money supply hadn't increased so much over the last 25 years, they'd be even cheaper than they are today. Now these are wild dreams of mine, maybe, but
No, I mean, I do think that's part of it. I think competition. Well, part of the problem with the capitalism, the late stage capitalism that we live in right now, is that competition is no longer enforced. Like, we've allowed companies and industries to be monopolized and consolidate, where there's very few people competing for those markets, and that's obviously a huge problem. I do wonder at what point. I mean, we look back in the 30s, and I don't know what the population of the United States was in the 30s off the top of my head, but it was a fraction of what it is today. The world was probably half of what it is today back then, if not less. And you can only, spread something so thin, I suppose, before you need to have more physical currency going around to allow the economy to function.
Well, it depends on who you read. And one of the issues with economics is that economics is a social science. It's not a natural science like chemistry or physics. It's not a hard science. And so there are different schools of thought with respect to what's required for an economy to grow. Now, there is empirical evidence, history, of economies growing significantly without the money supply increasing, right? And I think that this has been, it's almost like a con job that central banks have convinced people that the money supply needs to increase for an economy to grow. Why? As long as there's enough money in the system to exchange all the goods, like creating money, it's like money is just
Right.
the medium of exchange. The means of payment are the bikes that Taylor make. That's what gives you the
Right.
wherewithal and demand goods. You're just using money as the medium of exchange.
Yeah, and that's true. And then I guess my thought on that is that medium of exchange. The supply then is sort of irrelevant, right? If it's just the medium of exchange, and really part of the reason that it needs to keep increasing is because people are always going to be trying to get the most amount of money for themselves. I mean, every one of us. It doesn't matter if you're the poorest person or the wealthiest person. Most of us are trying to increase our own personal wealth so we have, more comfort. We can buy more stuff. That's how an economy functions. And so every time a person is holding more wealth, in order to keep that economy running, there needs to be more wealth in the system to keep that exchange happening. And we see this now where you've got billionaires hoarding massive amounts of wealth. For the rest of us to still be able to go out and buy stuff, we need some sort of currency to do that. So you either need to tax it out of the top, which is probably what we would argue being more in favor of, and force them to reinvest that into the economy in terms of not then printing money, or you're going to need to somehow replace that currency in the system for the 99.9% of everybody else who isn't able to hoard $1 billion.
Yeah, so I hear what you're saying, and it should be more fair. And a lot of the stock market wealth that, you've seen household wealth go through the roof in the States. Most of it is the top 10%, right?
Mm-hmm.
Because it's all
Yeah.
homes and in particular stock markets. But for people to get more wealth, it's capital that's required. Capital is the real wealth in an economy. The money is just used to move that capital around,
Mm-hmm.
right? Now, if your argument is that the government should print money and give it to lower income households to make it.
And that's not my argument. I want to be clear here. But yeah,
but that could be an argument. Like if you think
Mm-hmm.
that, it's so unfair and this will even things up by printing money that has no capital in it, once you give it to lower income households, once it's spent, it extracts capital from the rest of the money already in existence. So, I mean, that could be an argument, right? But the goal of the book is not to say what is right or wrong and what we should exactly do, but how it actually works, right?
Sure.
And, I was just looking at these numbers this morning. If you hold on for 1 second, because there's all these charts going around showing how, net worth to debt is at all-time highs or debt to net worth at all-time lows or whatever. And so just looking at equity and mutual funds, this is from the New York Fed. So total equities and mutual funds held by the top 1% is half. The top 10% own 87%. The bottom 50% owns 1%. Now, there should be wealth disparity based on effort and ability, but within reason, right? And so this is more a comment just to be wary of these charts that some people will show you, particularly policymakers, to show you that you've never had it so good. Stop whining. Look, the stock markets are all-time highs. Housing prices are soaring. Why are you upset? Well, these are not good things. If stock markets are soaring because of super low interest rates or the Fed put that Wall Street knows that they'll always be bailed out. And there are, I believe, a record number of zombie companies in developed markets around the world. So a zombie company is a company that doesn't produce enough operating profit to even pay the interest expense on its debt. And so the Bank for International Settlements, they sort of track this. I haven't seen it in a while, but a few years ago, I think it was 17% of companies, listed companies in developed economies, were zombies. And the only reason that they're still alive is because the Fed drove interest rates to zero so these companies could continue to destroy capital, which leads to lower productivity growth over time. Bankruptcy is not a lot of fun, right? But it's a necessary part of a healthy economy. Like if you're no good at what you're doing, so why should you rely on the central bank to take other people's capital from them and give it to you to continue to do something nobody wants? And
right.
it's and when I think of it, you're saying that you'd be surprised if enough people actually wanted to do the right thing, like my age. And you may be right. But I think, this path is not sustainable.
No.
The path we are not on is not sustainable. So one way or the other, it's going to change. And the path that I am recommending would be painful. But I think it would be the least painful. And I think it would be the most fair. Like if we don't initiate the change ourselves, then you will change it for us. And we will like that a lot less than the change that I am putting forward.
So it sounds like you're foretelling or foreshadowing some sort of economic retooling at a minimum, if not an economic revolution, potentially, if things remain the same.
Potentially. I mean, who knows? But I just know that this cannot continue. A, because it's not fair. People they just can't get on with their lives. It just doesn't work. And,
and I do think...
Go ahead, Jordan.
Oh, I was just going to say, I do think, because, you have more faith than I think I do in humanity, people doing the right thing, even if it's painful, and I admire that, especially your generation, but we see this over and over again, especially with, real specific policy points, like forgiving student debt. if I hear another baby boomer tell us, well, you took out the loans, you should pay for it, bullshit, on something that they never experienced, they never had to deal with the type of debt, they never had to deal with the type of education prices, with the societal expectation that this is what we're supposed to do by them. They told us to take these loans out when we were teenagers.
Yeah.
And then it's like, they didn't understand how these loans worked. I mean, if they did understand how these loans worked, they would have told us probably not to do it because, they're predatory. They're basically credit card loans you could never file bankruptcy on, and pushing, kicking the can with the interest rate all the way down the road to something that would never get you paid off. And despite educating people on this repeatedly and explaining how all these people who have taken out student loans and worked for 20 years and owe more than what they owed when they took them out have paid back their principal plus loads of interest, and they'll never get out from under this, and how it's not fair. These people are still, I'm not voting for that. Why should I have to pay your loan off? Why is that my responsibility? And that is repeatedly the things that get in the way. I mean, over and over and over again. And it's like, if it can't be on something so, what I feel like is straightforward as that, then we go to, oh, you're going to take half the value of my home away from me. You're going to take half the value of my retirement investments away from me, that sort of thing. I don't know how we sell it to them. And I hope maybe if you can convince them that this is the selfish way for your generation to do that, because again, eventually it'll be something that's a lot less probably friendly for them. Maybe that's the expectation they need. But I do think that the motivation is always going to have to be a selfish one to get this kind of change.
Yeah, you might be right. I don't know. I think more people want to do the right thing than you realize. They just don't know what's going on. And this is not going to be easy. And I say this in the book. And the first and foremost, it just has to come from a place of fairness, right? It's a moral issue in my mind. And if you're benefiting at somebody's expense, then that's a moral issue. And it needs to change.
Right. Well, and that's where our political values try to align with economic values. Our political values are that we should exist in a moral and ethical society, at least to a baseline of human rights that many, many countries also agree upon, right to healthcare, education, housing, some sort of living wage that's beyond a minimum wage to exist or persist in a very not sustainable manner. And so we see what you're saying, and we feel that people are maybe not as selfish and are willing to, slap away their neighbor's hand for them to gain more. But when they don't understand what's going on, and it doesn't seem like we've been able to really, in the last 50 years, say since Reagan, we've seen the effects, but the end result of trickle down economics and just some people call it crony capitalism. I just call it regular capitalism, or end state capitalism, is not. The effects of that are barely sinking in, even when it's so in their face. Housing prices, education costs, retirement savings are absolutely abysmal. I think I saw today 66% 58% of Americans retire today with less than $10,000 in savings. And still, people are not understanding the failings of the system. And so our position is that this probably has to come from political government, top down, mandated. These are the rights of humans that exist in this country, and we have to figure out the system that fits those. And so that's where we're struggling with.
Yeah, well, listen, there's a lot of unfairness, and I think it's easy for people, when they're doing okay, to turn a blind eye. And
Certainly.
so, and it's great work that you guys are doing to point out what's going on out there. And, as I said it before the show, like I try to stay out of politics just because I got enough on my plate. And so, I leave that to you guys. And my role that I hope I can play is just helping people understand what's going on. And then let's just make this a fairer system and stop turning a blind eye to what others are going through. And it just feels awful. You know what I mean? It really does.
Absolutely.
I think that that's something too that is important. Is I think that people want to do the right thing, and especially like I think we can all agree that the system's broken, something's wrong, and we all see that and feel that. But that understanding, that knowledge of why and how it's wrong and broken is what's difficult. And a lot of this has been systematic propaganda by the powers that be to sell us on this system because they're benefiting from it, and that's why I think a lot of people view these policies that would help everybody, probably even including them, or at least be less painful in the long run for them. They just believe that, these people are lazy and that's why they can't have the things that I've gotten, or that's why it's getting harder for them, and it gets difficult. Because if it's ever somebody they know personally, in any one of these situations, that person's different. Well, I know my kid or my grandkid's a hard worker, and they're just having a really hard time getting ahead because it's expensive for them. But then if you say that this is a systematic problem, well, no, it's everybody else is lazy. My kid's the exception to the rule, and that sort of thing. And it's hard to get people to connect those dots. But I do think that we can all see that there is a problem that is causing people to suffer, and it's getting everybody on the same page and realizing that there's some sacrifices that need to be made. And I think that because these are incredibly complex, complicated systems that nobody really, on a base level of society, people don't really understand. We all participate in it. We all use these systems. They're integral to every part of our daily life, from buying a car to buying a house to, going to work and the paychecks that we receive.
Yeah.
But we just operate in this system without that understanding. And I think that it's really important, the work that you're doing, putting out a book like this to educate people on those systems and doing it apolitically, or as apolitically as possible, I think is important, because a lot of people shut off as soon as they feel that something doesn't align with their politics, and the way that they feel ideologically. And if you can just be like, these are the facts and the way it is, and I'm not disagreeing with your politics, I'm just explaining to you how something works, maybe makes that more digestible for them, makes them more willing to listen. So I really appreciate the fact that you're putting in the effort and taking 6 years to write a book to do that. I do think it's incredibly important.
Well, thank you. That was the goal from the get-go. And it's one thing to write a book, it's another to get people to read it.
Absolutely.
That is true. I absolutely love your voice, your accent. Have you done your own book on tape for your book yet? I think I think that would help sell it.
Thank you. Yeah, we just started yesterday. We're doing it for all.
Oh, that's awesome.
Yeah.
And are you the one reading it?
Yeah, I am. Yeah.
Wow, that's
like
great.
That. You have to let me know when that comes out. I listen. I do think, I don't know. It's something about that kind of like soft British accent. It just makes you believe whatever you're saying. It's probably why you were so good at getting people to trust you with the big words and the investments.
It's an accent. I knew it was something. But
Yeah.
it's interesting you say that I have got a British accent. A lot of people don't.
I wouldn't even know. It almost gives me Anthony Hopkins vibes. I love his voice too, and it kind of gives me those vibes. I get a little bit of that, and I could listen to him read me a book all day, every day. So
don't kidnap him and throw him in a big hole in your basement or anything like that. Paul, on that note, I like the way that Jordan sort of summed up sort of the topic at hand. If there was one thing that you want people to take away from your book, perhaps the most important thing in your eyes or the most difficult concepts to grasp, what's kind of the one thing that you want people to take away?
I should be prepared for an answer with it.
No, it's okay. It's okay.
Because there are a number of things, right?
Sure.
But, it wasn't bad intentions. for the most part, I don't think it's about bad people. It's not going to be easy. Try to have more empathy in your fellow citizens. And, the thing I love about America is that when America decides to come together, boy, does it ever come together, But it's important that everybody realizes that we are all in this together, and that it's not just me that is going to be required to make sacrifices and the top 1% are going to be fine and dandy. No, they need to see it. They need to know it. They need to trust it. And I think with the understanding of what's going on and what's required, that will bring forth the leaders who will take those actions. I really believe it.
I like that. That's a message I can get behind. I think that's a winning message in today's political environment.
Well, thank you, Taylor.
Empathy. I think empathy, 100%, is if a little bit of empathy goes a long ways towards a common goal and making something better for everybody.
Yeah.
Rising tides lift all ships and all of that. So if you're helping somebody else out, you're helping yourself out in the long run. And being empathetic is a lot of times the selfish thing to do, and you can feel good about it in the process. Let everybody know where they can find your book, how they can consume your wisdom here.
Okay, well, I don't know about wisdom, but my stuff. So yeah, thanks, Jordan. So the book's available on Amazon or Barnes and Noble, Thrift Books. I don't know if you guys ever use thriftbooks.com. I love that. A lot of used books, and I prefer buying used books, actually. I like them when they're marked up. I see where other people were and what they had to say, because I got a lot of.
I don't think my wife wants her bookshelf of 1 million books to be handled by other people. She's a new book buyer.
And then my website is called Paddington Capital MGMT, so short for management. Paddington Capital MGMT.com. And there I've got other podcasts that I've done. I have a weekly blog, which is free, and you can read that. I also have it in a podcast audio version. I have a summary of my book there as well. And
Spark Notes version.
Yeah, no, exactly. So and I think that's it. And social media stuff most of it is Paddington Cap. So, but all the social media links are on my website as well.
Well, thank you so much
Perfect.
again, Paul. Everybody, go check his stuff out. Check the book out. If you can't focus on reading very well, the ADHD kicks in. It sounds like there'll be an audiobook out here very soon. In Paul's soothing voice that should make it easier to digest. And if you want the Spark Notes version on his website, I do think that this is really important stuff for us to be educated on. And unfortunately, our education system has probably intentionally failed us at that point. But it's never too late to start learning, and it's never been more important to understand it. So I think that this is a great resource. Please go check that out. And obviously, we appreciate you guys watching, listening. That's why we do what we do. If you want to support the show, you can buy merch off joewagon.com, or you can support us with a subscription on YouTube, or I think we still got that Patreon up and running that we don't do anything with, but it'll take your money from you. So we appreciate that as well.
You're supporting independent podcasts. That's for sure happening.
Mm-hmm. Yeah,
on Patreon.
That's working. And hopefully this is providing some capital for the world and the money that you give us for doing this. So yeah, we appreciate all of that. Go add some more capital by buying Paul's book there, and we really do appreciate you being on the show here.
Well, guys, thank you very much. It was a real pleasure.
All right.
Absolutely, for us too. And thanks everybody for tuning in.
See you next week.